right, all you wonderful money masters and treasure hunters. Welcome to the November 29th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I'm still sick. But I absolutely do treasure your presence here today. And my outcome is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So hopefully you're off to a great start of your day. All of a sudden, I'm starting to cough here. We'll see if I can shake that. I just got to change my focus just like that. So let's go take a look at one of our tools. This is the tool that I call developing your own model out there. Now, success, folks, success is absolutely a very personal thing. For some people, it means money. For others, it means love. For many, it just simply means happiness out there. What does success mean to you? Success is something that each of us need to define ourselves. Success, folks, is what you need to be able to do, and you need to just simply have a definition for it, because if you don't, how do you know if you will have achieved it? Now, the secret ingredient, just like if you were baking some chocolate chip cookies, probably some of you have some secret ingredients for your chocolate chip cookies. Maybe some of you have some secret ingredients that you use for your trading out there. The success ingredient, the secret ingredient for defining success is nothing more than having an open mind to alternatives, which is really the same thing as saying learning to appreciate the other side of the debate. In trading and investing, what do we call that? We call that taking a look and identifying the bullish position as well as the bearish position. You should be able to do that on any trade or investment that you get in. You want to be able to open yourself up to both sides of the trade. Remember, if you're selling, somebody's buying, and if you're buying, somebody out there is selling. Should make you say, something to think about. Now, here's what we want to do. You want to be able to listen to a variety of opinions out there. Here at TFNN, you've got a real variety of opinions. 9 hours today. We've got this show here. I believe Tom and I are doing the Money Master show today. Then 11 to 12, we got Basil Chapman. 12 to 1 today is Larry Pesavento. Then Daryl Martin, David White, Ken Shreve, the Tom O'Brien show. So you got plenty of opinions that are out there as well. As we'd love to hear yours. You can always give us a call at 877-927-6648. But it's always listening to a variety of options before you make up your mind. And that might mean just simply reading a variety of books, because no book, no one speaker, no individual host, no one has all of the information or all of the answers except really you. You're the one that has to evaluate everything. We want you to take advantage of everything that is available to you. We want you to be eager to learn. We want you to, no matter where you're at in your journey. Some of you may be very far along in your journey. That doesn't mean that you stop learning out there. In fact, everybody listening in should be taking advantage of the Tiger Dollar promotion that we have going on, because education is what it's all about. What is the last book that you read? What was the last investment that you made yourself? You should be making those on a continuous, ongoing basis. Always, because you should open yourself up to learning out there. Just as an example out here, we got a Tiger Dollar promotion right now where you get 25% bonus to every dollar that you spend. Now, there's a minimum of $500. On top of that, not just that bonus that you get, you also get a contribution to the Salvation Army. I mean, if you're not giving, folks, you're not living out there. You need to give to yourself. You need to give to others. If you spend $1,000 or less, we will provide in your name, so you get a tax deduction, 5% of whatever it is that you've done at $1,000 or less. $1,000 or more, it's a 10%. So another bonus on top of that. Just to give you an idea, if you subscribe to 1 year of my service, you'd be investing $2.50 in yourself each day out there. That's what it would cost you. $2.50. I don't even know if you can get a coffee. I don't drink coffee, so I don't think you can get a coffee. That would be 2.5 items off the dollar menu at McDonald's out there. Which is better nourishment for your brain, the dollar menu or the $2.50 menu here at TFNN.com? So you want to make sure that you're investing in yourself. You want to take advantage of every opportunity that you can. Be eager to learn. Be eager to learn no matter how far along you are in your journey. And take a person's knowledge, but only take it as their knowledge. Make sure that what you finally do, folks, is a product of your own conclusion. You see, it's your own philosophy that'll become the most valuable ingredient of your success formula. If your philosophy is you're not going to invest in yourself, well, then that will help to define what your success formula looks like. If you do make continued investments in yourself, in time, in books, in energy, in other information that's out there, what it will become, that will become your guiding light. So develop your own model for success, folks, because it is your model. Let's go take a look at the model of success in the markets out here. Right now, we've got futures trading up, the Dow up about 61 points, the ES Mini, that's what we're looking at on our screen here. If you're watching us on Tiger TV, maybe you are watching us or listening to us on your mobile device. You can watch us on your mobile device as well. Perhaps you're just listening on tfnn.mobi. You can always, or a radio station, you can always catch an archive of this show on Channel 9. We're taking a look at the ES Mini 30-minute chart out there. It did hover in overbought territory. You know, we saw the move yesterday, quite a move in the Dow. It's about 270 points from bottom to top out there. If we take a look at the ES Mini at 10:30 when we were on the air, you had that big spike down. The big spike down, you can see that just simply using the relative strength indicator out there, that it moved down into that 30% or less level. You got a little pop there. And in fact, you got a pop there, and you didn't get really into overbought territory until about the hours of about 1 o'clock this morning. Now, 1 o'clock this morning, what you did, if you just simply take a look at expansion of swing points out here, and we're going to take a look at the most recent set of swing points, that on a 30-minute chart, we're looking at the time frame that came in here. We would use the spike high that came in at 1 in the afternoon on November the 23rd. So that was on Friday out there. That level in the ES Mini, 1407.50. Go from that high all the way down to the low that was put in while we were on the air yesterday at 10:30, low of 1383. Now, if you just take those 2 points, and what I've got here, you can see on my screen here, you'll see a number of red lines going across. Right now, excuse me, I'm just looking at the expansion of those swing points. And the expansion, the Fibonacci summation numbers that you want to be able to use, you want to be able to use 1.272 and 1.618. 1.272 is 1414 and a quarter. It's trading at 1414 and a quarter right now. How does that happen when we're on the air? It doesn't matter. What happened as the 1 o'clock hour came in early this morning, if you were up early, 12:30, 1 o'clock, you had a nice move up to the top of that level. You actually got to 1414 even. Close enough for us. Now, that candle was an important candle out there because what it did for a period of, we're looking at half-hour charts here, for a period of 5 bars out there. Let me refresh my screen here. I don't want this data here. It seemed to have changed just a bit. But for a period of 5 bars out there, what happened was you got these small little bodies. See, I had these small little bodies trading with inside the body of that session from 12:30 out there. As soon as you got a close above that on the 5th or 6th session, you got 1, 2, 3, 4. It was session number 5 out there, and it closed just a quarter above it. The actual close coming in at 3 a.m. was 1412.25. The close at that 12:30 a.m. session was 1412. As soon as you got just above that, folks, that was a continuation pattern out there. Continuation pattern suggesting that you were going to higher price. Most certainly it did that in the very next trading session, got above the 1.272 area. Of course, what you can see here is you were in that overbought condition. So as we came in, I don't know if it was the release of the U.S. GDP numbers, the economy grew by 2.7%. In Q3, I think that was up from a revised 2%. You also had initial jobless claims, so that was in the 8:30, 9 o'clock session. Maybe it was the jobless claims numbers out there. They dropped by 23,000 down to about 383. But what we did see is the only way to work off a overbought or oversold condition is either to work sideways or pull back here. What we can see the market was doing was simply moving sideways, pulled back just for that half-hour period, dipped down here. No longer is the market on an intraday basis here overbought, so it can move higher. I do suspect that what we will see is we'll see the ES Mini move up into that 1.618 level. That would take you up into 1422.50 or so and change. We'll see how it'll play out here, but that is on the ES Mini 30-minute chart out there. If we go take a look at the daily chart for the ES Mini, let's just try to keep it the same here. What we can see is we can see how price today in this trading session has gotten back above the trend line. Now, the trend line that we're talking about is the trend line coming off of the lows from October 4th. That's the black diagonal line that you see here on my screen. For a number of trading sessions, really since Friday, the ES Mini has been flirting with that area. And yesterday you got just a little bit of a close above this little really shorter-term descending trend line, this descending tops trend line, using as a basis the high of October 18th. That would be your first touch point at 1459.75. Your next touch point, the November 7th level, that is 1431.75. So we're up above it. We're up above two trends out there. That says, quite frankly, that the ES Mini, what it wants to do is what we had suspected all along, was go out there and tag the high from November 7th. November 7th was a downdraft day. The high out there was 1431.75. That's on the ES Mini. On the on the S&P cash out there, I believe it's right at about 1433, 1434. That is what the market wants to do. Wants to go up and tag that level. If we also just simply take a look at retracements off of the retracement of the high from September 14th down to the low that came in on November 16th. You'll also see, though, right now, very close to the 0.618 level. Looks to me like still the ES Mini wants to go spike, wants to go up and visit that most recent swing point out there. Did you see last night's full moon, folks? The most gorgeous full moon that I have seen in a long, long time. It was a thing of beauty. I'd go take a look at it tonight as well. 877-927-6648. How about that? I changed my focus and didn't cough as soon as I said I would. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Welcome back, folks. We've got King Dollar down 24 ticks right now. Gold up $6, trading out at $17.23. Silver up 20 cents out at $33.88. Light sweet crude up about a little over 2%, up $1.88 right now, trading out at 88.35. A tour around the world over in Europe. The DAX is up 53 points. The DAX trying to take on its swing point highs. We'll certainly look at that stock chart, up 0.7%. The FTSE up 0.9% this morning. That's $53 and change, trading out at 58.56. Over in Asia last night, you had the Nikkei up 92 points. Of course, the Nikkei up against some really stiff resistance. It's got a couple of different a Gartley sell and a butterfly sell pattern that it has to take on. Wasn't able to reach up to the top of those levels out there. So the Nikkei, I suspect, still going to be under some pressure out there to really move higher. I think it's going to move lower before it takes out the area of resistance that it's at. Of course, it's had one heck of a nice move just to get up to the levels that it is at. The Shanghai struggling yesterday. We talked about the Shanghai. That it had broke through a swing point low. The Shanghai wants to get down into the 2,000 level, 2010. It closed out at 2,056 last night. The Hang Seng was up 213 points, 21,922. We're taking a look at the euro here right now, and we are taking a look at the 30-minute chart on the euro. The black line that you see going across the screen, that really has been an area of resistance out here. You can see that's what it's trading into right now. It's trading out at 1.29920. So, and it's up in this area here of resistance at the same time achieving this little overbought condition. So this is not the place. Now, if you're going to buy something intraday, an equity, a currency, or what have you, wouldn't you rather buy it when it is trading down towards an oversold condition? I mean, just look at it here on the stock chart. If you were going to go ahead and take a trade, why don't you wait until the setup is best for you? If you were going to sell something, are you going to sell it while it's at the lows where it's near the oversold, or are you going to wait till it gets into the overbought territory? So you want to be able to use this tool as well as many others. Today actually is the last planetary index date of 2012 out there. So we had a full moon eclipse combination yesterday. We had the moon coming in at apogee. That's where it is furthest from us. So we had a triple whammy. Today we've got a 4 planetary index date. And if you'd really like to be able to learn these tools as well as many others, in fact, you should really just subscribe to the newsletter. Try it for 30 days, my newsletter, Mastering Probability. You'll find out exactly what happened on each of those P-index dates, and you should want to know what happened on each of those P-index dates. So go test out that newsletter. Let's go take a look here at Tiffany. Tiffany out with numbers, I believe, this morning, and certainly some guidance. Closing out at $63.73, trading down at $58.60. Let's go see what Tiffany is doing out here. Let's go look at that blue box. What you're going to see here is Tiffany this morning is going to trade down into an area that has acted as support. So we'll see what kind of volume it has. It broke out recently on August 24th, 2012. You can see the high of that day was 58.55. Very next trading session, gaps up with 9.2 million shares. That set up the little open window, the little gap up there. So what Tiffany also did was it pulled back, and it pulled back, never actually touched the high of August 24th out there. That's okay. The low that came in on September 4th as it was pulling back, and it pulled back with 4.7 million shares, in essence benchmarking that against 9.4. So about 50% of the volume, we'll call it. You can see as Tiffany came back here on November the 15th, it came back with 2.6 million shares. So the benchmark on Tiffany was 9.2. Then you were going 4.7. Then that area of 4.7 was tested with 2.6 and 1.7. Not enough to bust it down. That area has held as support. That area that I'm speaking about, the price point is 58.88 in the pre-market, trading out at 58.60. That says that it should come down and test the August 24th level. If it comes down with volume meaning more than 9.2 million shares, Tiffany will probably head to the swing point lows of June. Let's go to Lou in Nashua, New Hampshire. Lou, thanks for calling. Thanks for holding. How are you today?
Yeah. Okay.
You wanted to look at advanced auto parts, I believe. Tell us what you're doing, how it can help you.
No, it was actually Apple.
Apple. Oh, okay. Well, AAP would have been advanced auto parts. So tell us what you're doing with Apple and how we can help.
I got some calls at 565.
Okay, got some 565 calls. Trading out right now at 582. That is a beautiful thing. Apple looks like it wants some higher price here as far as the next level for Apple. You want to see it clear this 581 level. If you said some calls, you should take some profit off of the table. When we get back, we'll go see how these markets are going to pop. We'll go back and take a look at Apple with Lou, if you can hold on the line. 877-927-6648. Futures certainly going to pop up this morning. We'll see if they can hold that level. Intraday, we are near oversold conditions. Overbought conditions. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 53 points right now. S&P's up 7, composite up 20. Small caps up 7 as well. So leading the charge, the upside is the composite. Apple is popping up $10.48. That's good for our man Lou in Nashua. That Apple is popping to the upside. And how about this? You've got Advanced Auto Parts dropping to the downside. So let's go back to Lou. Lou, you've got the calls here in Apple. Apple gapping up this morning. Trade out at 593 out there. And, it looks to me like what Apple wants to do is run up to the sweet 618 level, which is in about the 629 area. But, what I would do is I'd make sure that you are in no worse than at least a break-even situation on this. Looks like a really good trade here to me. I have not seen really very many bears. If we take a look at the daily chart as it came off of the bottom here, really still no bearish signals whatsoever. But what you need right now is some good money management.
Gotcha.
So if you've got multiple calls out there, just make sure that there's no reason for you to lose any money on this trade at this stage for sure. So I would that's how I would manage it. It looks to me like you're going to have to watch the candles. Apple's come from an area where it was certainly really on a daily chart. It had not been as oversold since 2008, I believe, or even or earlier than that. Now it's starting to approach the overbought area. It's got a ways to go. I suspect that we'll see that occur right around the 628 level. It's at 594. Quite frankly, that can occur. I would expect that to occur by tomorrow. When we would see Apple maybe exhaust itself to the upside. So I just think you've got perhaps another couple days of this.
Okay, great.
Okay?
Yep.
You bet. Thanks for calling. Since Lou didn't call about Advanced Auto Parts, let's go take a look at it anyways, because how did that work? It's not the leader to the downside. It is down, it's number 3, though, off $5.50. So let's go take a look at Advanced Auto Parts, see what it is doing, and then we'll go back and we'll take a look at Tiffany. We were looking at that before the open. Let's go see what actually has happened so far and what kind of volume is coming out of that. So Advanced Auto Parts here gapping down this morning. This has been in a little bit of a consolidation out here. That was set off by the huge gap down that occurred on May 17th out there. That was not the first sign of weakness in Advanced Auto Parts. It was the second real sign of weakness, moving down with 6.8 million shares. What Advanced Auto Parts did, let me just refresh my screen, make sure that I've got all active data out here. Advanced Auto Parts had one heck of a session here on November 11th. But what Advanced Auto Parts was doing was 4.3 million shares, was moving in essence into that downdraft with 6.8 million shares. So it got back up to the swing point. Let me just put the line across here. So it was coming right back to where it had really broken down. You can see that area has acted as a very nice resistance point. That's the red line going across the screen. Coming in there with that wide-ranging bar would make me say, don't take a short just yet. But if you take a look at those candles in the ensuing days out here, you can see, especially as you got into the candle session on November the 8th, that is where the bears were firmly taking control of the market here. Just take a look at that long upper shadow. You got the same thing, same setup on November the 9th out there, gapping down this morning, trading off of its session lows here. But if we do take a look at volume, we've got pretty decent volume already, 514,000 shares. Now, what this is going to do, this is really coming into the last sign of strength here, which was the low, which was that candle, which was that session from November 1st out there. And that low is $70.08, 4.4 million shares. So we'll see what Advanced Auto Parts here is going to do. If we go back and take a quick peek at Tiffany, the blue box company out here, let's go see what it is doing, if it is holding its area where we were taking a look at the last sign of support out here, and that it is. So it's gapped down right into the candle, that window. As long as that area holds, that becomes a level of support. When I mean holds, you need to see Tiffany close above $58.55. If you do, then Tiffany would be, now volume-wise, so you've got some pretty steep volume here already in just, a few minutes of trading, 9 minutes of trading. Tiffany has 1.8 million shares. That 1.8 is really being benchmarked against 9.4 million shares. Let's go to Brian in Sonora, California. Brian, thanks for calling. Thanks for holding.
Thank you, Steve. I have a question about this special dividend being offered, and I was wondering if there's any way to benefit, and also to follow up on that, what happens to the stock price after the first of the year and the benefit's gone?
Well, you'll see an adjustment the day that the dividend is paid out, because what the company is basically doing is, giving away some of its capital out there. So if you've got a $2.50 dividend, you should see the stock price fall by maybe not the full $2.50, some portion of that, maybe 80-90%, maybe a $2 adjustment. So that is what you're looking at. Now, that's not necessarily a bad thing. What you want to be doing is you want to be taking a look at companies, where the stock chart at least, suggests that you should, stay in. Is there some entity? Is there something specifically that you're looking at? Is there something that you're holding?
Well, yeah, I'm in Lilly, and I hear a lot about Oracle special dividend, and just wondering now Oracle I'm not into, but I am into Lilly.
What's the symbol on Lilly? L-L-Y?
LLY.
Yeah, okay. So if we take a look at Lilly gapping up this morning, I think gapping up, let me just put my refresh button on here. Trading out at 48.42. This thing here has got, off of its highs out here, a lot of bearish look to this. So in Lilly, if you've been in this, is this a long-term holding for you and maybe a retirement fund, or? Brian?
Yes, it is.
Okay, so it's a longer-term holding out there. Okay, so, what Lilly hasn't done yet, it hasn't come back and tested the area where it broke out. It's trying to get back. Well, I take that back. Give me a moment here to put this on the chart here. So Lilly did. It had a breakout from August the 27th. When is their dividend payout?
That I don't know. And I was going to ask you how you, like, for instance, like talking about Oracle too. How do you find that information out and and get in before it's too late?
Well, it should be posted. You should be able to go to their website and under their investor relations, you should be able to find the information there. That'd be the first place that I would go to. So You should be able to, that would be the best place to look for that information, as opposed to just surfing the web in general. You can always call investor relations as well, and they'll be, in that way you're getting it from the horse's mouth. Okay, so that would absolutely be the best place, in my opinion, for you to get that data. In the case of Lilly, it had a real nice sign of strength here on the 24th of August, and that was at a price level from 43.36 up to 45.01. And the volume that you had there, or Lilly had there, was 48 million shares. When the market was pulling back, Lilly was also pulling back with it, but it came back with 6.8 million, 6.8 going into 48. That's really not a bad setup, and you can see it's bounced since there. So you've got a pretty good area of support out here. So from a long-term holdings standpoint, I don't see really anything wrong with the Lilly chart out here. So I would say you would just you would stay with it.
Okay.
Yeah, I mean at this stage I don't see anything wrong with the stock chart. From a longer-term basis, what this did was this had completed a 1 to 1.618, a little bit more than that, A to B equals CD up, and that was coming off of the August 9th, 2011 area. So once you make that type of A to B equals CD, it's going to retrace. Now, if we take a look at the retracement level, Brian, we'll just simply come off of that A point. That A point on this was the low from August 10th, so that was the 34.30 price level. And if I go all the way up to the high, what it did was only a 0.382 retracement. So that area where that last sign of strength where it broke out and only doing a 0.382 retracement, that says it's really a strong looking equity out here. That's on the daily chart. So, that's why I don't see any reason to, if I were in the equity and it was a long-term holding, I wouldn't be looking to bug out of it.
Okay.
At this stage.
Yeah, it just kind of brings me to the questions about pouncing on some of these dividend payout dates, and never really thought about it or tried to strategize about it before. It's kind of just a early thought in my mind that I understand, or at least I hear rumor that you can pile into these stocks before they pay out these dividends, but you pay a price when after the dividend's paid, then everyone piles out, which drives the price of the stock down. So
yeah,
I don't know.
So I've never used that as a trading strategy. So I don't have any experience to I think your intuition is really more correct. I think when you're already in an equity and you're just simply assessing it from what is this going to potentially do to my position. Is there some weakness? Now, look, on the weekly chart, I can identify some weakness, a bearish engulfing candle as it made its highs, but that was to be expected because of just simply the A to B equals CD pattern that was out there. So I think you more assess it with regard to is it part of your longer term holding strategy? Where are you? And at this stage here, if you're in it, you're going to expect. Typically not a one-for-one pullback in the stock price, but you should expect to see the stock price drop by some portion of what it is that you're going to get back. But that's not a bad thing. I mean, you're basically to break even at that stage. Mm-hmm. So I don't know that it's really a great trading strategy now to try to jump in on it. It's more so I think you assess it with regard to where you're at in just the total position. That's my thoughts.
Okay. I appreciate it. Thank you very much.
Hey, you bet. Excuse me. Thanks for calling.
You bet. You bet.
Sorry about that, folks. I better grab a little water here. Otherwise, we could have a problem. Sorry about that. Okay. So, popping to the upside here. Let's go take a look at some of the stocks here. Popping and dropping. You got Priceline up a nice 2% here this morning, up $12 and change. Regeneron Pharmaceuticals up about $5. Google up about $5 as well. Semtech, SMTC, up 16%. So let's go take a look at that stock chart and see what it is doing. I can say I'm going to have to really change my focus here so we can do that. Semtech. I certainly don't want to be coughing in your ear. So gapping up this morning, has some nice volume in it. Let's go see if there is some news behind this stock, this equity here. Revenues of $160 million versus $124. You've got earnings per share of $0.25 versus 40 cents. Not so good there for Q3. Net income $16 million versus 27. Must have some good guidance here. So gapping up this morning with volume, headed for the swing point high out here. That swing point high is February 3rd, 2012. Only 377,000 shares. The low is $29. It's already tagged that area, $29.55. Looks like it's doing it with more volume. So this thing is going to try to break out today. And not a bad-looking stock chart, at least on the daily stock chart here. So it's going to try to break up and out above the price point of $30.46. Maybe not do it today. It's going to have the volume certainly to do it today. Again, that was 377 back in February of 2012. Today so far, 406,000 shares in only 7 minutes of trading. So let's go take a look at what this looks like on a weekly chart, see if there's any kind of A to B equals CD here. So on a weekly chart, no real bearish signs on this equity. On a weekly chart, you've got 1.8 million shares, so it's going to have enough volume on the weekly chart to also take out this area. It has been consolidating really ever since the May 2011 time frame out at the highs, approximately where it's trading at right now, down to, I'd say, the lows, really, for the most part, consolidating the lows of February 4th, 2011 out at the $21 area. So this is not a bad-looking stock chart at all. That is Semtech Corporation. Amazon up $2 and change. You got ASML Holdings getting the kibosh this morning, as well as Liquidity Services. Both of those stocks respectively down 18 and 15%. So let's go see what they are doing in the marketplace. Then we'll go take a look actually around the world. We'll take a look around the globe and see what is going on. So let's take a look at these two stock charts. ASML is the first one. As I said, down about 18%. So gapping down, coming into a high volume low out there. So that is no surprise. That high volume low is on October 17th. 2012, that had 18 million shares. The low there, 63.29. It's trading at 62.94. The volume, 18 million shares, as I said, so far today, 783,000 shares. If this volume pace were to keep up, this will send ASML down to the June 4th area. June 1st, the low is $56.81 out there. So taking out a swing point, and we'll see if it's going to take it out with volume. It is a high volume low being tested for sure. Let's go take a look at Liquidity Resources, LQDT out there. LQDT. As you take a look at Liquidity Resources, also attacking a swing point low. That swing point low, boy, it's taken this high volume area here, which was the July 2nd level, 7.6 million shares. That price point, 37.68. Trading at 37.01 right now. Dow up 47, S&P up 6. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern. on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. The Dow up 50 points right now. We're going to take a spin around the world. We're going to go over to Germany. DAX trading up 57 points out at 74.01. So we're taking a look at the DAX chart. Number one, you're going to see a number of lines out here. So let me describe to you exactly what it is that you're looking at. The black horizontal line going across the top, that has been an area of resistance out here. That area of resistance, really, you can use the top of September 14th out there. On the DAX, that number was 74.46. So right around that area held as the DAX tried to get up on into that area and above that area on September 21st. It also held when the DAX tried to make a run for that level on October the 18th. It then tried to make gapped up on the 7th of November as it tried to get up there and then sold off the entire trading session, even closing very close to its session lows out here. Now, what I've also done is I've just simply from the very top of the swing point high, which in the DAX would be September 21st during this time period that we're looking at, and just simply starting from that top, I drew a little blue diagonal line. I used as at the next touch point, the next swing point high, which was October 18th. And you can see that the DAX is starting to make just the trend line, for whatever reason, is acting as a resistance area. So it's very possible the DAX may not get all the way up to that resistance line, the black line that is up there. It's important because, we just had a pretty large lunar cycle come in as the market moved up. We've got a 4P index date today going on as well out here. The DAX, the reason why we're taking a look at the DAX is because the DAX is the strongest index in the market. Kind of hard to believe, isn't it? But the DAX, it is, and so you want to make sure that you're looking at strength, you're looking at weakness. That's where you're going to get the best indications out here. What does it mean if the DAX closes above this slightly blue diagonal line? Just means that it'll likely go up and tag the black horizontal level out there. The DAX, also it's trading inside the rising price channel. So this is a very bullish, this rising price channel goes back to the lows in August out there. So it is not a bearish pattern really whatsoever. It's not that far away from its highs back in 2011 at all. Not that far away from that level. It's trading into the 2008 time frame back in the January. So the DAX does not look bad, but the DAX has not been able to bust through the horizontal resistance level. Again, you can use the high of September 14th, the 74.46 level to benchmark that. Let's go take a look at the Nikkei. I did tell you the Nikkei last night was up about 1%, but the Nikkei, again, if you didn't pay attention to patterns, you might say, oh boy, the Nikkei is trying to break out. Well, not so fast. The Nikkei is up against a very, very strong resistance area. You've got a 0.618 larger term Gartley sell. That's a big pattern, folks. That goes back to March 27th, 2012 out there. So that is a formidable area of resistance, and you had a 1.272 butterfly sell pattern that also completed. That was one that only went back to September 19th, 2012. So yes, did the Nikkei move up last night? Yes, but until it takes out the highs with conviction, the highs we're talking about, that 618 level, would be 94.88 and maybe some change out there. That would set up a move to the 0.786 level, but it's got to get up and over that. I suspect that what we will see is we will see the Nikkei continue to pull back into the 9100 level. It doesn't have to do it tonight, but that is what the Nikkei is set up and wants to do. Part of that is most likely because we do see the Japanese yen also pulling back on the U.S. dollar-Japanese yen currency pair. Thanks so much for being here, folks. Have a wonderful, fantastic, terrific, outstanding Thursday. I look forward to seeing you in the morning or in a few. Take care. Bye-bye now.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.